Palo Alto stock is trading at $284.13 and is up over 47% in this past year. Shares are up because they have beat their last 4 quarterly earnings reports by an average of 13.8% and have seen absolutely insane net income and EPS growth over that time. And analysts are putting their 1-year price targets at around $335.58 on average, which represents about an 18% upside 1 year from today. I'm calculating an EPS of 261 TTM and a PE ratio of 108. And from what I can find, analysts are projecting an EPS of $4.06 for July 2026. And if we multiply their current 108 PE ratio by their projected EPS for 2026, then we can expect to see a stock price of $441.98 at that time, which represents a 56% upside. However, it's unlikely the valuation is going to stay as high as it is, so I'm going to use the valuation multiple of 60, which is between Palo Alto's current valuation and the technology industry average of 45. This projected PE of 60, combined with a 2026 EPS of $4.06, would mean a share price of $243.60, which is a 14% downside. One thing to note, their debt to equity is good at 0.41, and I'm not seeing many red flags at the moment aside from a high valuation, but it's worth noting they did cut their forward revenue projections a month ago, but that has since been reflected in the stock price having pulled back around 24% since then. So aside from their PE being over 100, I think their underlying fundamentals are solid and their growth trajectory is obviously favorable. But again, that high valuation is going to bring some short-term volatility, and so even though it's not likely the best time to buy, I think that investors who believe in the company's future and are willing to hold for a while could see favorable returns a few years down the line if they decided to pick up shares today.